Hi, I'm Larissa Schäfer. I'm Assistant Professor of Finance at Frankfurt School of Finance and Management. And today I'm going to talk about political ideology and international capital allocation. International capital flows have increased substantially in the recent decades, sparkling interest not only by policymakers but also researchers in understanding their determinants and underlying frictions. So, for example, research has shown that linguistic, religious, ethnical, or geographical distances can explain variation in bilateral investment. So, if countries, for example, are culturally distant from each other, you see less bilateral trading. In our paper, we look at a new factor that has not been looked upon yet, which is the political ideology of investors with foreign governments. So are investors politically aligned with foreign governments or not? Why do we think it's important to study? Because first, political polarization has increased in the developed world in the past decades, especially in the US. And what do I mean by political polarization is that individuals from different different parties do not just disagree on fact-based issues, but develop generally a dislike and distrust towards each other. Secondly, emerging literature shows that the alignment, so individuals' alignment with the US president affects their views of the economy and their domestic capital allocation, so primarily in the US. So, for example, research has shown that Republican investors around the election of Trump were becoming more optimistic about the development of the economy and thus reshuffled their portfolio towards equity stocks and high beta stocks relative to Democrats that were reshuffling their portfolio towards safer assets. And lastly, geopolitical risks, such as the war in Ukraine, has also shown the importance of capital flight by foreign private investors. So what do we do in our setting? We look at cross-border syndicated loans and international equity mutual funds that constitute a large part of cross-border lending. Let me show you an example of what exactly we are doing. So imagine you are a US Republican bank that lends to Canadian firm around the election of Justin Trudeau, which followed basically Christian Harper, who was conservative relative to Justin Trudeau, who was liberal. So what we see basically is that the Republican bank, after the election of Justin Trudeau, becomes politically further away from the party in power in Canada, and we are interested in understanding how it will affect the lending of the bank. And what we are able to show is that banks that experience an increase in political ideology after an election decrease their lending by 10 to 22%, which is large. But at the same time, they also charge higher spreads, but do not experience more default, which shows that these results are not driven by borrower riskiness. We also show similar results for international equity mutual funds. We see that they reshuffle their portfolio away from countries where they experience an increased political ideology. More interestingly, since we have this large set of different elections, we can also show that it's also not just the economic policies that matter, but also social policies such as traditional morality or human rights that affects the investment decisions of individual investors. Secondly, what we also show is the channel or the mechanism behind that. And the mechanism is the following. What we're able to show is that investors, once they become politically misaligned, they have a more negative view of the development of the economy in the destination countries relative to investors that have that are more politically aligned with the company. So meaning that have a more positive view of the development of the GDP. And lastly, what we are able to show is also that it matters on the aggregate. So countries where governments are politically further away from each other have less bilateral investments between each other. So for example, one standard deviation increase in political distances leads to a 3.7% less bilateral portfolio allocation, which translates into around $40 billion for an average country pair. So overall, what we think or what we show is that the political ideology of investors matters in models of international capital allocation, and given rising political risks and polarization around the world, we think that political ideology of investors will become even more important.